So welcome everybody. We're here at UIC to talk about impact investments. We are here with Maite Fibla, who is the co-founder and also the general partner of Ship2B. So we are here to discuss about impact investments in general and also how Ship2B works in particular. We'll also want to know what is the situation in Catalonia, etc., etc. So welcome. Thank you very much for accepting our invitation to be here. Let's start the discussion with some general questions. For example, we hear many times, especially lately, the term impact investments, but we also hear the term social enterprises. So I think there is kind of confusion to the public of these different definitions. So can you explain to us, how do you define impact investments?
Okay, when we talk about impact investing, we refer to those investments made with a clear purpose to solve a specific social or environmental problem, combined with a positive financial returns. If we compare with the traditional venture capital, in our case, we put impact at the center of our decision-making process. In the case of traditional venture capital, normally they take into account only two variables in their decision-making process. These variables are risk and financial returns. We introduce a third variable, impact. Then we have a three-dimensional making decision process: impact, risk, and financial returns. And I think that these are the main.
Summarizes everything. Great, thank you very much. So just to clarify, so let's assume that we have a company that approaches you and operates in digital healthcare. Yeah? Let's say it's an app that analyzes blood. So potentially this company will have impact, right? Because it will improve the way we analyze blood, it will improve the healthcare system, etc., etc. But operates, it is for profit, so it aims to make profit. So would you invest in the company like that? Would you consider this as an impact investment?
Okay, the short answer
yes, the short answer
is no. Okay. Unless this company provides a healthcare service for a vulnerable group of people or underserved people. Let me explain. We need to, it's important to differentiate between impact and impact investing. There is a global initiative called the Impact Management Project that provides us a new methodology to analyze and classify impact. Following this methodology, we can classify or identify three types of impact: type A, type B, and type C. Type A is when a startup has or act to avoid harm. Okay. Type B is when a startup acts to avoid harm and also actively benefit stakeholders. And type C is when a startup acts to avoid harm, actively benefit stakeholders, but the most important thing, contribute to solution to a specific social or environmental problem. Okay. It's in this last case that we refer to impact investing, and in the second case, type B, is ESG investment or ESG investing. In the specific case of healthcare industry, if you have an app that helps to achieve a better, healthy life for everyone, then you are contributing to benefit stakeholders, and we consider this app as ESG investing. Okay. But if you focus on help people for example, with obesity problems, then you are contributing to solve a specific problem. And in this case, when we talk about impact investing and impact ventures.
Okay, great.
Yeah?
That was very clear. Thank you. So let's move and talk a little bit about your company. It is a very famous, well-known and respected fund in Catalonia and beyond. So perhaps you can tell us a little bit. I also heard that you are currently fundraising, so well done. So perhaps you can tell us a little bit more about Ship2B in general, its key objectives, and its presence in Catalonia and beyond.
Okay, Ship2B is an adventure that I started 8 years ago alongside my partners Xavi and Clara. And our mission was to make a better world. And our vision was that impact economy and impact investing will be the future. That's why in 2015 we launched Ship2B Foundation, and we start to work with entrepreneurs, large companies, and also investors in order to help them to generate more impact and as well as more positive financial returns. And finally, last year, we decided to launch Ship2B Ventures. Ship2B Ventures is a private venture capital company. And we decided to launch this company because our aim is to catalyze more private capital towards to social business. And now our team has under management more than 40 million euros, and we have invested in 23 startups.
Great.
In the last 5 years.
And the startups come from Barcelona, Catalonia area, or beyond?
Yeah, from Spain.
From Spain.
It's from Spain. Our focus is invest in startups with entrepreneurs and born here in Spain.
So you say this started as an adventure because you and your business partner, you wanted to make this a better world for everybody. And now, because of COVID, I would have thought that there is much more meaning in what you're doing now. Because of COVID, I would have expected that there are much more companies now interested in helping people that have been severely harmed because of COVID. So do you see an increase in let's say, applications that you receive due perhaps of the pandemic? Or do you expect that there will be an increase? Do you see that your role is becoming more and more important as a fund operating in this area?
Yeah, and okay, yes. If we compare when we start 8 years ago, here in Spain there were few active players. And most of the social business was focused on social inclusion of vulnerable people, like for example disabled people, with poor technological levels and with problems to attract and retain talent. In contrast, by the other hand, in the last 2 years, more or less 3 years, we detect that the deal flow we have better deal flow. We have company with better teams, with more talent, and with high levels of technologies. And yes, of course, I think that this situation improve the interest not only for entrepreneurs but also for investors to invest with impact.
Great, thank you. And do you see that this trend is increasing in the whole Spain? So do you see that people now are more aware of impact investments in general, of the possibilities of investing in companies that can ultimately benefit the society. Do you see an increasing trend? I mean, I have been checking the traditional venture capital trends, and I see there is an upward trend. But in terms of in terms of impact investment, do we see a similar trend in Spain?
Yes. Here in Spain, we start late, but we are growing quickly. In the case of investors, I think that there are three main issues that affect the decision to invest more in impact investing. The first one is that private sector and investors have more awareness of these social and environmental problems. The second one is that we are more conscious that the fact that we can act to avoid these problems. Third, now we have tools to do it. In the last years appeared different financial instruments that allow these investors to invest in impact and to help to solve these problems. But we detect that there are more interest, but they don't feel very comfortable with this kind of asset yet. And there are three elements that we need to work better in order to improve and to make that feel more comfortable. One of them is that we need a better or good management teams with that combine experience and track record in impact investing, but also in venture capital, or traditional venture capital or private equity. Second, we need to show more examples of the good mix between impact, returns, financial return and risk, in order to show that it's possible to make money as well as generate high impact levels. And finally, we need impact measure and reporting methodologies that allow to show how is our impact and avoid impact washing, because there are some investors that are worried about impact washing.
Can you elaborate a little bit? What do you mean by impact washing?
Impact washing is, there are some companies or startups or investors that they say that they are generating impact, but they don't measure this impact. And if you don't measure your impact, you can know if really there are a positive, negative, or neutral impact.
Yeah. I see in your case there is a huge challenge, because on one hand, so you want to make some financial return, and on the other hand, of course, the main objective is to generate impact. So when you decide in which company to invest, so when you're thinking about your investment criteria, so if you were just, let's say, a traditional venture capital fund, it's quite clear. You need to look at the team, you need to look at the potential return, the industry. In your case, you have an additional variable, like you said at the beginning. So how can you balance both? How can you find a company that ticks all these boxes, great team, great potential for growth, etc., and generate impact? So what I'm trying to say is that your job perhaps is much more difficult than a traditional, let's say, venture capital fund.
I'm not sure it's more complicated, but we introduce a new variable that is impact. No, here, like traditional venture capital, when we analyze a startup, we take into account the management team, we take into account strategy, the business model, but we introduce impact. For example, one thing that we analyze when analyze the management team is if this team has a clear purpose to generate and measure impact. We expect that their eyes shine when they talk about how they can help people or how they can save the planet. Or for example, when we analyze the business model, we take into account the relationship between the impact model and the business model, because we look for a positive correlation between financial and impact returns in order to avoid situation of trade-offs. And finally, of course, as an impact investors, we take into account the contribution of these startups on one of the big problems. In our case, we take into account, or we focus in three problems, three challenges. The first one is improve the health and quality of life of vulnerable people. The second, climate change, and finally, education.
Okay, great, thank you. So, in terms of when you decide to make an investment, you identify a company, ticks all the investment criteria, so you need to come up with a valuation. And we all know that this is like a very tricky subject. And I would have thought that it's even trickier in your case. So, do you use a specific technique? For example, what we teach our students here, and also this is like kind of a standard methodology, is the venture capital methodology that the traditional venture capital method funds use to value a company. So in your case, do you have a standardized process?
Yeah, that's a good question, but there is not an easy answer.
Right.
Yeah, no, one of the most important challenges in impact investing is finding a methodology that allows us to compare financial and impact returns. And there are two pioneers initiatives, the impact management project and impact weighting accounts, that try to do that. We use the impact management project in order to evaluate and measure impact. Following the impact management project, we analyze the three dimensions of impact. These three dimensions are: what is impact, how is being impacted, how much or depth is your impact, your contribution as a startup to solve a specific problem, and finally, the risk. What is the risk of not generating the impact that we are checking? Following or using these five dimensions, we try to combine and balance impact and financial returns.
Okay. And when you talk to LPs, okay, so the limited partners, the investors into your fund, perhaps let's say the European Investment Fund and other perhaps philanthropic organizations. So what do they want to hear from you? Do they want to hear like they will receive a decent return, let's say like 7%? Or do they come up with a specific financial return? We know that in the traditional industry this is much higher. So would you say that in impact investment industry they're much more conservative? And do you have a figure in mind what they're asking for?
Depends.
Right.
When we talk about impact investing, there are two types of impact investing. There are some impact investors that want or look for market returns. market financial returns. But there are in other case, they are looking for below market returns, but they want that you generate more impact. Then we have both. In our case, in Ship2B Foundation, we have different instruments, financial instruments, more related to below market returns. But in Ship2B Ventures, our focus is generate a lot of impact, but also financial market returns.
Okay.
Yeah.
Okay. And how easy is it to convince LPs to invest? I mean, do you find this? We discussed earlier that you say now investors becoming more aware of the potential impact and this tool because it's quite recent, let's say. So when you go and approach them with your investment strategy, with your investment proposal, what is the reaction you receive? Is it positive? What I'm trying to say is it easy to convince an impact LP to invest?
Depends of the type of LP.
Okay.
In our case, we have 3 types of LPs.
Okay.
And the first, public institutional investors, like for example, European Investment Fund, or here in Spain, Axis. Axis is a venture capital instrument from ICO, Instituto Crédito Oficial. The second type of investor are private institutions, like for example, Bank Sabadell in our case, Repsol Foundation or an SBAT Foundation. And the last are family office and individual investors. In this last case, yeah, we observe an increasing interest in this kind of asset, but as I said before, they don't feel very comfortable.
Oh, yes.
And we need to show more track record, show them that we know how to invest in impact startups, but also you need to combine in your team people who comes from the impact sector and another people who comes from the venture capital and private sector. And of course, show that it's possible to combine both things, impact and financial returns.
That's great. Let's move to the last couple of questions. It's more about students. We have several students here that are very interested in impact investments from both perspectives. Some of them, they want to set up their own company, startup with the impact, potential impact, and they want to raise funding. And on the other hand, we have students that want to join the industry as investors. Okay, so what kind of skills, let's talk about the latter, the investors, the students that want to be investors. What kind of skills do you think that these students should possess? Because it's not very clear, like you just mentioned, you need to combine a team that will have, like some people will have like more kind of business skills, financial skills, and other team members that will have my kind of a social impact, like social science background. So if somebody is interested to join, let's say Ship2B, what would you be looking for, let's say at the entry level?
Okay. We take into account 4 issues.
Okay.
Main issues. First, financial and sectorial knowledge. In our case, knowledge in the health or medtech sector, climate or education. Second, good analytical skills. Third, curiosity and strong desire to constantly learn about new business, new technologies, market trends, and so on. And finally, of course, as an impact investors, we take into account social and environmental sensitivity of these students.
Okay, thank you. That's very interesting for them to know. And my last question will be about the startups. So let's say we have a student that has this amazing idea with huge potential impact. So what is the first step? I mean, it's not, we know in this industry it's not very easy to meet you guys, you know, like it's not like we can knock the door of a fund and say, can you invest, please? I mean, what would you advise? What is the process they need to follow?
No, it's so easy. They only have to send us an email with a good introduction and with a short deck, explain what is the problem that they want to solve, what is the team or why they have a good team, and I think that's all.
And what is the next step then? If you are interested, you call them in for...
They send us an email, we analyze the debt, and we give them a response of if answer is if we think that this company can be invested for us or not.
Okay, great. Yeah. So good to know.
It's easy. It's more easy. Yeah.
Good to know. Well, that is from me, Maite. Thank you very much for coming here, for taking the time, for explaining in so much detail the industry. I'm sure our students and our audience will find this very interesting. So thank you.
Thank you.